What you do is go live and go live. Okay, boom. That would make the channel live now. Welcome back, Bear family. Thanks for joining us today. We're going to take a look at some charts. Keep it fairly brief and simple. I know the last 48 hours I was a little sick, so I didn't say a whole lot, but the idea still stood the same. So we ran up. Let's actually jump into Bitcoin's price here right now. If you're on Rumble, give us a thumbs up. If you're on YouTube or Twittergram, give us a thumbs up as well. Comment somewhere just lets us know everything is working smoothly. Very helpful. So this is a short time frame for Bitcoin. We're on the 6 hour right now. As the other day, like I said, what I wanted to know was this was a kind of a change of character for the supply versus both in and out of the market. We had a nice run back up to test. Now this test we talked about happening. We kind of figured that we were going to get some type of test. I'll show you what that looked like in Avalanche, because I think this was the one that's kind of leading the pack to show us what's going to happen next. Not that Bitcoin, just other areas like Solana as well have had really well-formed trading ranges. Bitcoin's trading ranges have not been as clear. So I suspect that we're going to get one of those clear trading ranges for Bitcoin, which I think is going to show up in temporary distribution in other assets. So I just want to try to make that as clear as possible. I don't think the bull market is over. I think we're going to go a lot higher, but I think we're going to have some downside first to confuse this bull market. The big players usually like to do that, although they don't like the price to go too low, because obviously they want to run it up again as high as possible. So the lower it goes, the less high it's also going to go. So it's going to be a very sweet learning moment here. So with Solana, or sorry, with Avalanche that we're currently looking at, let me get rid of the bear claw here so it's a little bit cleaner, and go from here. So you can see the green and red, green for the bottom and red for the top of the trading range. We moved right back to the top and couldn't close above. So this is what we talked about. There's kind of two scenarios we thought were going to take place. We're going to close up here and come back down. And either one, so one of two things is going to happen here. We're going to run back up and can't get back into the top portion of this trading range, and then we're going to come lower. Or just like we're going to hit this. This is going to be the test. We're going to break back into the top of the trading range near the point of control, retest the bottom of the trading range again, and then move higher. So if we move down lower for Avalanche and for some of the other assets, it's only to be, it's basically will be a temporary distribution. It won't be a full-scale distribution into a bear market, which is what people are generally most interested in. Is the bear market over? Is the bull market over? The bull market is not over. But I think we could see something here which appears to change the trend just enough to get lower prices in for the last amounts of assets to be scooped up before going higher. And we've seen this a few times. And again, the important part to note is that in this, we've already moved through one of the first kind of major parts of accumulation into the bull market excess. So I think Avalanche is going to end up at $120 to $80 still. I just think we might see something that ends up being a much larger trading range that ends up looking like this. And we've seen this happen a few times where our in the box trading range, its breakout into the SOS becomes just a portion of another trading range. And as a matter of fact, it's very clear on Bitcoin when we go to the weekly and look at some of our previous charts here, what that looks like is you have multiple trading ranges within the trading range. So this kind of scale and vary in function of the motions of the market, I think, are so important. Let's go back here. This is the weekly of the 2018 or 2017 to 21 market cycles. And there's a few points that I want to look at here. There's a large trading range between the very lowest of the price and the top of the price. But there's also smaller trading ranges that took place in between here. So as we go down to the daily, this will become a little clearer. Although, yeah, we're going to have to go here. Awesome. So first and foremost, one of the most interesting is this very bottom of the bottom of the bottom trading range right here. This was for Bitcoin in 2019, November 18 to 2019. This little trading range right here, where you have your first reaccumulation range, your SOS, and your primary backup that doesn't even come close to the bottom of the trading range here, and forms your kind of final backup phase right here before breaking out to $13,000 to start again an entire new trading range. Now, if you look closely too, there's here specifically, let's just stay on this 2018, 2019 moment. You also, I'm going to make these a little bit bigger. Let's go 4 pixels. Yeah. So here we actually saw this again. We saw another trading range form right afterwards. And you saw a few of the variations of smaller ones. I'm just going to kind of just roughly draw this up here. And these are all the reaccumulation ranges into the breakout. So here you had multiple reaccumulation ranges after a very short range. So your reaccumulation range at the bottom here was 125 days. And from the SOS to the top of that market cycle was 80 days. This kind of shows the time compression I was speaking about too. Almost the identical amount of time that you were in accumulation for this box. You're very similar to amount of time in breakout for this box as well. So that's kind of an important feature of what I think might be coming next. Now, I don't think that the next trading range of Bitcoin is super volatile, but I've been waiting for this really nice range to form. Now, we had the SOS range was really nice here. This is a beautiful trading range between 25,000 and 28,000 for Bitcoin most recently. So again, I think that something like this is going to happen. Not exactly this long, deeply drawn out wick into the pandemic, but we just haven't had a spring and a reaccumulation range of basically any kind since 2020, the 25 to $30,000 area. So part of me thinks that's going to happen here. And as I mentioned in my previous videos, there's kind of two ways it can happen. It's either going to stay between 60 and 75,000 before it breaks out, or it could come all the way down to 52,000 and have this. And this kind of feels contrarian enough to be right. Now, there's a lot more people agreeing that the bull market is taking place than there was when we were down here saying Bitcoin's going to go to like $60,000 pretty easily right now. It went way higher than that. I mean, we had first thought like 50 grand was the main resistance, and we broke all the way to 70 almost instantly afterwards with no really well-formed accumulation range yet. So I think we get one more reaccumulation range here, and it could be a volatile one. It could be between 50-something thousand like this, and then we go to 150, 200,000. And again, this is just kind of a comparative element about what happened in the previous cycle with Bitcoin, is that at the very end of the cycle, even if it's after March 2020, you have the pandemic wick, which was in a spring, 2 very beautiful reaccumulation ranges take place, and then the breakout of all-time highs. So I think a lot of people are expecting this to repeat, that the last time we broke out of the top of the trading range, we just went for new all-time highs. I think the thing that it's missing though is one of these beautiful reaccumulation ranges in the kind of in the middle of the box. And I think that Bitcoin's now going to show us that it's kind of SOS in its backup phase. So that could mean that we even have a spike. It could mean we even have a spike here upwards of like, let's say 80 before coming back down to retest, maybe even as low as 50. It could be super volatile here before then going much higher. A lot of people are making comparisons of the previous bull markets, and I think this one's going to be a little bit different just because it doesn't appear to me that ETF holders are particularly interested in Bitcoin as like a maxi type hold. I think that once these larger players can find particular profit ranges, they're just going to sell and create volatility that they'll look to buy back up and make more profit from in the market. So I think the ETF will add more volatility here to the downside than people think, especially when you have the potential for high frequency trading funds to participate more in Bitcoin as well because of ETFs. I think you'll see more leverage contracts go in as well. So the point here I wanted to make specifically is I think we're going to see a very nice reaccumulation range here, something akin to what we've seen in the past. very similar to the SOS here or the two previous SOSs we just looked at in 2018 to 2019. So what that means, though, again, I think the volatility here going into the halving makes sense as well. I think it adds confusion to people's plates. That kind of fear will allow the price to drop as low as possible, get rid of the last few remaining sales within these order blocks before driving the price up much higher and more profits start to be taken. And we've kind of gone over, just to kind of reiterate my thought process here. There's one or two charts we shared from a Glassnode previously that I thought were important, which is that profit taking has started already. This is the long-term to short-term holder supply ratio. And as we zoom in here and look, as we move into the bull market, as the price goes higher, we have a very sharp change in hands between long-term holders and short-term holders. Okay, so this is the previous bull market cycle up to the top of the market. So what's interesting here is that in the previous market cycle, that long-term to short-term holder change is actually now more rapid than it was previously. So even though people are like, well, retail's not here, this chart says otherwise. This chart says, as a matter of fact, retail has been here and long-term holders have been selling a dramatic amount of their supply to the market quite quickly. Now, one of these is obviously the idea that GBTC is a long-term holder. They've been a long-term holder for a long time. So those coins moving dramatically into new holders' hands doesn't necessarily mean as much as it did before, I think. But also brings me back to what I just said, is that if we imagine the ethos of Bitcoin is a new store of value and money, an ETF is generally used to bind or to make profits where people are moving into and out of positions, which is why we have stock market bubbles as well. So the ETF holders, again, don't strike me as the long-term holder. They strike me as more mid-range profit taking. They have a more traditional sense to the market. Now, that might not be true. It might be that just Bitcoin maxis that can now buy through ETFs in large scale, but I don't think that it doesn't fit the ethos. I mean, we know people who have a lot of money who buy Bitcoin and hold it in wallets and very safe multi-sigs for a reason. It's because they don't want the exposure to the third party being the ETF. So if you're holding the ETF of Bitcoin, are you actually a Bitcoin holder? No, not really. So that crossover there doesn't strike me as particularly as the long-term holders that we have had in the past, if that makes sense. I think they're from a different ethos. So here, the long-term to short-term holder supply has dropped at the steepest rate it's dropped in all the previous market cycles. So again, not that we're near a top, but we've just seen such a dramatic shift in holder supply that I think some type of middle range for a second is going to start to show up here. So this will be another one we'll keep a close eye on. And here's another way to look at it, was just, again, the transition from long-term to short-term holders as market prices moved up. So we're right, I think, kind of at the middle here, where the market's price is still about to go up dramatically, but that there's profit taking here. And that profit taking is going to be ultimately what shores up this final trading range that we produce here for Bitcoin. So there were a few others, obviously, we're watching to keep track of that, like Fetch. Again, Fetch moved stronger to the downside here on equal supply. So for the first time, we've seen a slight shift in character for the supply of these particular assets. And for something like Fetch that's already up 50x in a year, it's much easier to think, okay, we're going to see some type of temporary distribution here, most likely that fills and creates a whole new range before the bull market continues, especially in the other, for some of these other assets. And we've seen this multiple times with Fetch, where you go up 10x, down 80%, up 10x, down 80%, up 10x, down 90%, all within one cycle. So we're up 10x. Are we going to come down 10x for Fetch here? And do we get to make a highly valuable learning lesson of this changeover from what reaccumulation looks like, which is where we should be most confident about positions to the upside, and basically just go long everything. And then this temporary distribution, where I get, even though it might not be super volatile for Bitcoin, maybe only downwards of 52,000, that could be an 80% drop for something like Fetch here that brings us all the way back down to test some of the previous tops. So there's a potential for massive downside in other assets. I think a lot of Fetch could still go to $15 in this bull market cycle, but just based off what it's done already in the past, it could easily come all the way down to 90 cents and then shoot up to $10, right? Because that would be, again, what it's done in the past. Down 80%, up 10x, something like this. So it's not out of the realm of possibility. And I think that here, if we use Solana again as an example, we followed some beautiful trading ranges. Let's get rid of the bear claw for a second. Although the bear claw is also another beautiful thing that will keep on for trend shifts. Again, this is just a picture perfect reaccumulation range to the middle of the box here for Solana, a breakout, an SOS backup, and the SOS. So now here, this is where it starts to get tricky, where that you've already had a reaccumulation, 2 reaccumulations. We're up hundreds of percent from the bottom of the trading range. More volatility, I think, is more likely. You're up 10x here from the bottom of the trading range for Solana too. So because we've had 2 beautiful trading ranges, I suspect a little bit more volatility. It might not mean that we even go much lower for something like Solana. It could just be $140. It could be a reaccumulation after decline, where we come all the way to $123, move back into the range and move up. Either way, in the long term, I think we're going up, but I think more volatility feels the most likely here. Same with Avalanche, 2 trading ranges, a beautiful trading range. And then I think Avalanche and Fetch might be the leader to kind of give us the data more clearly. Because if Avalanche can't come back into the box here on this next move to the upside and doesn't get to or at least to the point of control, we're going to come lower. Yeah. Now, how much lower? Maybe not a ton, but this again just could end up being this weird trading range. We're like, oh wow, I missed it. This is actually the automatic rally. This is the first shakeout before one final run up. So trading ranges, because you're dealing with scale and variance here, is very tricky. It's much easier to follow the upside of the market. Know that we've had, again with Fetch here, when there's so much up already, it's easier to assume the downside is coming. Whereas when you're near the bottom, it's easier to assume upside is coming. And that's just it's kind of how trend shifts work in general. Ethereum, again, I think we're going to go higher for Ethereum, but we're going to go lower again first. So Ethereum here, in what I believe is a reaccumulation after decline, because we have the previous top breakdown right here that we couldn't hold. So again, this is a beautiful little understanding of there was a distributional trading range that took place here on the 4 hour. Very quickly, bang, 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 up thrust, distribution, can't get in the box, down hard below. But this again just became part of a larger trading range, which I believe again is bullish. But for Ethereum, that could be something like this, where we touch back down to $3,000 and then move higher. Or if we see strength here, we move back above, we retest the top of the trading range and then continue the bull market. So all the assets are kind of in different places because the distributional point through accumulation makes a huge difference. But they'll all kind of move in tandem there. Because again, Bitcoin could come to 52,000, which is for Ethereum only 3,400 or something, before breaking up. So we're right in the last phases of knowing, are we going to get that further downside for Bitcoin to 52,000 and form a beautiful trading range through halving, which I think feels the most justified. I could be biased just because I want to see a nice trading range for Bitcoin here one last time before we move into all-time highs. So it could be just a bias, But and also Chainlink here too is not looking great. This is starting to look like a type of distribution, although Chainlink has been super confusing in its trading range. In the future, when things are more confusing like this, I'm just going to leave them alone. Even though I think there's room for upside here, I much prefer to see something like this with Solana, where I don't like Solana, but the trading range is so sexy, it doesn't matter. If you know you're going to get guaranteed profits, the market is telling you through the assets technicals, screw what the fundamentals say at that moment. I would much prefer to find a beautiful technical chart than a better fundamental chart, because if the technicals aren't clear, it makes it much harder to make really confident positions within the market cycle. Again, Bitcoin gave us some really beautiful market conditions, a beautiful trading range, both in the box, the SOS, and we just haven't had one yet, which is again why I expect another one here soon. So, but with Link, it's been very difficult because you've had multiple up thrusts like this, and then distribution afterwards. Again, I think for future market cycles, I'll stay away from these. Even though the upside was pretty decent, it was dwarfed by others that we were following at the same time. I think it was a good leading indicator, the fact that it broke out. So if you have leading indicators, because originally I thought Link would do better, and it still might here. Again, it could confuse me here because I just don't understand a lot of this. Like, it's very rare that you see a trading range that just goes up and down, up and down, and up and down like this so often. It's much more consistent to see these beautiful horizontal trading ranges that take place, and it happened with Fetch. It happened with many others. So with Link here, I've just been a little bit confused by the technicals itself. Anyways, there's a bunch of other stuff that's going on in the ecosystem, but I wanted to keep today's update short. Just kind of a side point to what I had talked about previous times. I'll go over some more stuff a little bit later. I've got in a private group, we've got a Zoom stream we're planning, so we're going to do live Zoom meetings every month, and some educational stuff there that'll be fun. Share some of the community's thoughts and process today as well. And then, I'm going to send out a new updated newsletter here shortly too. Thanks for all the support and sharing this journey of growth and education. We'll see you guys again on the next episode. I appreciate it. And then, boom.